Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It was another whipsaw price action right across the board as the Australian dollar continues to challenge the key area of 66.50.55, where the 60-day simple moving average is positioned. Meanwhile, the US dollar, which measures the greenback strength against a basket of six major currencies, was unchanged at 101.60. On Wednesday, US inflation took the center stage with the US Consumer Price Index, the CPI annual inflation rate, fell to 2.5%, which was below expectations. However, core CPI, excluding food and energy, rose by 0.3% month on month and 3.2% annually, exceeding forecasts. With the US Federal Reserve meeting approaching fast, the central bank has signaled readiness to cut interest rates. However, with the latest inflation data now suggests possibly a 25 basis point cut is more likely than the 50 basis point cut reduction investors had anticipated. So with the technicals rebounding, the ADX still remains negative. Let's see how this market performs into Thursday. And if we see further gains, we could see a break of 67.10.15 and then furthermore on towards 67.65.75 to 68 cents. Traders should continue to monitor signals closely and adjust risk management strategies just in case we see a break of 66.5, as this would lead stop losses down to 66 cents. The euro also had a whipsaw price action, even though the dollar index remained unchanged. Looking ahead to Thursday, the European Central Bank, or the ECB, announcement awaits, with the forecast anticipating a rate cut from 4.25% to 3.65%, following a sharp decline in the Eurozone. Inflation to 2.2 in August does favour this move. As the market weighs on the level of 110.15.20, further stops may be seen down towards 109.45.65, but overall, I do anticipate the market will bounce and look back towards its top side of 111 to 112. It was a very whipsaw price action for dollar yen and now closes with a dragonfly doji. Keep an eye on this pattern as further gains may be seen today, although the resistance still holds around 143.15. If we see a topside rejection from there, then the market still remains vulnerable, and a close under 141.60 would see further risk to the downside to the region of 136 to 138 as a measured trajectory. Turning to sterling, the market was also whipsawed as it took the challenge lower but found good support close to that 129.70.80 area. With the close in New York still remaining somewhat heavy, we may see another test towards this bottom side of the range. I'm not going to get too bearish here as the technicals are getting a little to the oversold side and therefore could again find demand and look for a bounce back towards 131 to 132. After a strong move to the upside, spot gold found supply close towards that level around 2,530. There's still a lot of work to do to support a bullish case, but the market does need to close above 2,542 to give the rally on to 2,600. In the meantime, keep an eye on the technicals and do continue to adjust your risk management accordingly, as we haven't fully broken to the upside, but the ADX is supporting the bull trend, so therefore could find support around the 2,500 mark and eventually see the climb higher. Wrapping up with oil, the market rallies over $2 as fears of the Hurricane Francine escalates further. Nevertheless, we were oversold and the market needs to continue on this current pattern and break above $67 a barrel. That would see a move on to 69 to 70. Any pullback likely to still find support around 65.5. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day.